Okay, let's talk about some very, very, very important things that happened, actually, let's see, in the last 4 days? Yeah, 4 days with very long-term implications. Okay, first off, what we need to talk about is that we need to talk about bonds. First, let's take a look. 2 bond indexes. I'm going to, let's see, overlay a couple Fibonacci retracement lines. So I did right there. We'll put some right, let's see, yeah, we'll put some right there, and we will put some right there. Okay, so what do we have? We have major pivots. We have a major pivot starting right here the last week of February. But I'm going to completely forget about the Fibonacci's. That's just something to say that there's a turning point. Okay, but what I want to go over is this long-term trend line right here, starting from down here, touching there, and let's see if this even goes out further. 10-year, no, it only goes out to 5 years. So this trend line was broken, and it was broken, let's see, on fairly high volume. Let's say like 6-month chart. Okay, it wasn't broken on too high volume. But, on the other hand, TBT, which shorts bonds, broke upward on very high volume. So, what does this lead me to say? Well, in a market, generally, there are 3 main markets. First one is the commodities market, which we'll start with the bond market, which I'll do in blue, B for bond, and it goes up, and it goes down, just like a business cycle. Then we have the stock market, which, what's a color that begins with S? Purple doesn't begin with S, but that one goes something like this in terms of peaks and troughs. Okay, and then finally, we have commodities, which, what's a color that begins with C? Green, maybe? No. That one looks something like this. So, what do we have going on right now? Let's say that this entire cycle, one complete upcycle and trough, will last 4 years. Okay, so this entire thing from side to side lasts 4 years. We have a expansion and we have a decline. Okay, so what we need to know. We need to know that bonds, they top first. Then the stock market tops second. Then commodities finally top. And notice we are in the 4th year of the 4-year market presidential cycle, which means that we are right here, especially with that long-term trend line being broken. So, let's take a look at the charts. So we have a bond trading sell signal there, AGG. We have a bond trading sell signal right there, broken long-term trend line. And then let's take a look at junk bonds. What are they doing? Junk bonds are still not really doing much. But we also have, let's see if there's a symbol for, yes, municipal bonds. Municipal bonds are also going straight to hell. You can't see by that chart where, I'll get it up here just a second. Okay, here it is. It's a ratio that they did back at Elliott Wave International. Thank you for letting me use this source. We had a break up in yields, which means a breakdown in prices in the municipal bond market. Going forward, let's take a look at, there is an industrial metal ETF, I believe it's JJG, JJI. One second, I'm going to try to get this one too. Alright, found it's JJM, which we can see JJM, and then we're going to take that bond index, BND, or we'll do AGG. We'll do AGG since I haven't done that one yet. Okay, so we have JJM and BND. What we're going to do is we're going to take JJM and divide it by the price of BND. And what we are left with is a ratio chart. Okay, so when the line is going up, that means that industrial metals are outperforming bonds. When the line is going down, it means that bonds are outperforming the industrial metals, which are most linked to the economy. So we actually had a buy signal happen in mid-February. Now this is just a short-term buy, but if we approach this line, and we are approaching this line, get ready for a really inflation-filled summer. So I just want to go over a couple of things that happened that might have slipped your mind, but it's definitely showing that a bear market is going to be here probably by the beginning of next year. Because if we're right there, and that's maybe July, September or something, that's maybe August, September, October, and there's a bear market next year. Be ready for that